Aloha! Lahaina Lee here with your Maui Real Estate Market Report, February edition. Let's talk about what's really happening in this market. Because if you just glance at the January numbers, you might think that not much is happening. You might even think this thing is stuck. But when you look deeper, especially at what is going under contract, there's more going on here than the headlines suggest. Let's start with condos, and let's do the numbers. January condo sales were dismal. I'm not exaggerating. We haven't seen numbers this low since the early days of the Great Recession. And that was when the whole world was going sideways. We knew January might be soft because only 75 condos were under contract at the beginning of the month. That's a thin pipeline. When you start with 75 in escrow, you can't expect 150 closings. Still, the sales numbers were ugly. But here's where it gets interesting. Pending sales jumped 28%. 28%. That brought us to 96 condos under contract in January. Now, 96 isn't booming, but it's the third highest pending number we've had since June of 2024, which is when this condo market really started to slide. And in mid-February, we're still seeing new contracts come in at a good clip. So while closings were rough, contracts were quietly stacking up. And contracts are forward-looking. Closings tell us what happened in the last 30 to 60 days. Pendings tell you what might be coming. That's why I feel compelled to dig deeper when I see this kind of an increase. And it seems like there might be a story behind what buyers are buying. So let's break it down. Of the condos currently pending, roughly 60% are in condos that allow short-term rentals. The other 40% are in non-STR complexes. That split is actually pretty normal historically. But here's the head scratcher for me. Of the STRs pending, about 60% of those, the majority, are in apartment zone complexes, the ones considered at risk under Bill 9, not the hotel zoned Bill 9 proof properties. Surprising? Well, it is to me. I mean, you might assume that price is the reason, but the median asking price difference between hotel zoned and apartment zoned units in escrow is only about $15,000. That's on a roughly $750,000 purchase, so that's not really that significant. So buyers aren't choosing apartment zone because they're drastically cheaper. Maybe they and their agents optimistically believe the new hotel zoning pathway ultimately gives those properties a future. And with any luck, the bill and the zoning process will get passed and implemented before the amortization period runs out. On the other hand, maybe these buyers are financially strong enough that if the STR rights go away, they're comfortable using the property as a second home. Maybe a lot of friends and family will use it from time to time. Whatever, it's not panic buying or panic selling. It feels calculated and thoughtful. Now, putting future sales in the pipeline feels great, but supply and demand, that's still a thing. Condo inventory rose slightly again, about 1%, bringing us to 918 condos for sale. Now on its own, 918 is just a number. But because sales have been so light already, that translates into just under 21 months of supply. 21 months. In most markets, 6 months is considered balance, so buyers have options. Lots of options. And when you look at what that inventory consists of, well, to start with, over 60% of the condos for sale are in hotel zone complexes. Add to that the large percentage of apartment zone properties that still allow short-term rental, and there is no shortage of STR-capable product available. That supply pressure is exactly why median and average condo prices dropped over 20% in 2025. November felt like the low water mark. The median dipped below $600,000. Since then, we've seen some stabilization. Not acceleration, stabilization. And stabilization is step one. If pendings continue at this pace for several months and start to meaningfully reduce that 918 number, the tone changes. We're not there yet, but we might be starting the process. Now, let's shift to the single-family home market. January closings were unimpressive. 52 single-family homes sold. That's down from December, and it's the third lowest month in this past year. But once again, I had to lean into the numbers. Pending sales jumped here too, 25% up from 96 to 120. That's no small leap. And by mid-February, contract activity was continuing. That doesn't feel like a fluke. I'm feeling some momentum here. And that may be being reflected in selling prices. The average selling price came in around the low $1.9 million range. Basically, that was flat month to month. But as you can see, just 2 months ago, the average was sitting at $1.3 million. That tells you the mix of what's selling has shifted upwards. The median selling price has now risen 3 months in a row. That's not explosive growth, but it is an improving mix. Does that speak to luxury? Well, 5 homes closed at over $4 million. That's actually about average for a month in Maui, but it may be a little light for what we think of as the peak season. Light, but maybe not alarming. So where is this activity happening? Central Maui and South Maui each had 27 new pendings. Upcountry had 18. North Shore, which is Haiku, Spreckelsville, Paia, stayed pretty steady. West Maui had 9. Hana had 0. So no major surprises geographically, but it's still tough to buy a house in West Maui, while in other parts of the island, buyers are stepping in. So what's really happening? I wouldn't say the market is taking off, and I wouldn't say it's stuck. What I see is a market as defined by human beings doing the best that they can, that's trying to find its footing. Condos were rough, but pendings improved. Homes were soft, but contracts jumped. Inventory is still heavy in condos, but demand is showing signs of life. This doesn't feel like 2021, and it doesn't feel like a collapse. It feels like buyers who've been cautious are starting to move. Now, if that continues into March and April, we'll have a different conversation. For now, I'd call it measured improvement. And after the last couple of years Maui has had, measured improvement is something I'll take. If you want to know how your specific condo or home fits into this, whether you're thinking about selling or just trying to make sense of this real estate market on Maui, that might be a conversation. Because the real estate market on Maui isn't just one single market. What's happening in your complex or your neighborhood has its own unique characteristics. I'm here if you want to talk story. Mahalo for tuning in. If you have comments or questions, drop them below or shoot an email to lee@alohapots.com. I answer every one. And if you like this episode, give us a like and maybe send it on to someone you know who's thinking about Maui. And if you haven't already, subscribe to make sure you don't miss anything. Oh, and if you're someone or if you know someone who's thinking about buying, selling, or just keeping track of Maui's real estate market, we have a fabulous team of seasoned, well-trained agents standing by to help you out. That's all for now. So, from the greatest island on earth, this is Lahaina Lee saying, aloha! Tony Brown produced this podcast. The information provided in this podcast is for educational and informational purposes only. It's not intended as a recommendation to invest in real estate or any other financial asset. We are not financial planners, certified public accountants, or attorneys. You should consult with a qualified professional before making any financial, legal, or investment decisions. All investments carry risk, and past performance is not indicative of future results.